Hey all, it's me Tom Weller from forexreviews.info. In this video I want to go over how I use my hedge strategy when I'm trading. Like I said in the past, I don't use it all the time, but if the market is trading in a certain way, definitely hedging is a strategy some traders can use, and it can actually be very profitable as well. Okay, I'll just go to the charts now and I'll just show you how this strategy works. First of all, I'm on the Euro US at the moment. What I'll do is I'll go to the H4 to begin with, and I'll just remove all the stuff that's on the chart. Then I'll go to the daily, as I usually do. This is a habit of mine. I'll go to the daily and I'll just draw all the major lines on the chart. This is what I call the major swing points, the major support and resistance. I don't bother too much with the minor ones. Okay, so as you can see, there are all the major daily support and resistances that I've drawn on the chart. If you want to know a bit more about how I do that, you can read my post on support and resistance. Shows you exactly how to do it. Just make sure they're all lining up quite good on the daily there. Yeah, okay. Now what I'll do is what I like to do is I'll drop back to the previous time frame. Okay, so there are all my charts, my support and resistances that have been drawn from the past. These are areas where the market has turned time and time again. Like, as you can see, I don't use any indicators on the chart here. I'm just using price action and support and resistance. Okay, so the first thing we do is we'll just start from the beginning, right? Okay, a sequence of this price action strategy. Price action hedge strategy. And what we do is, with this hedge strategy, is it's not really about thinking so much. These can be pre-programmed into your account. What you do is you just, I'll make the bullish lines green, right? And I'll just put them in now, and then we'll go through the sequence of how this can work, how this strategy can work. And where to take profit if you're using this strategy as well. By the way, this is not a 100% win trade strategy, but it makes profit, and a lot of it too. Okay, I'll make these ones red. That just means a sell. Okay, so as you can see, there's my chart, and these are the major support and resistances, and I've got buys above these supports, and I've got sells below the support. So it's basically, if the support breaks, it protects that trade. So starting here, as we do, just put a sell order here, as we saw that nice big resistance there. Okay, you always got to start somewhere, so I'll just put and so how this works is, as the price comes down, right, we blindly take profit at this target where this buy opens. So we'll work that out. Okay, and I'll just add that into the chart. Okay, so that's 105 pips taken. That's 105 pips taken from that sell to this buy. Now a buy opened here. Now the automatic take profit on that buy is up here, where your sell opened to begin with. So you can pre-program this. As you see, it didn't go back up there just yet. So that buy went into negative. However, just below, as it broke below support, which it did pretty much straight away, it opened. So you had a buy and a sell open here in between this area. It came down and closed automatically at this spot where another buy is opened. So, okay, that's 103 pips. I'll start adding the negative ones in a second too. For the negative ones, I'll just put minus. And so you have a negative trade here of $134, around 134 pips. Okay, so I've got 134 pips here. Just put that over here so we know it's in between those two ranges. Okay, so another buy opens here, and the take profit would be up here. Please bear with me, this might get a bit confusing. So I'll put all the take profits on the chart and I'll put the negatives along here until they are taken out. Okay, so a buy opened here. Price, as you can see, it didn't go back up straight away. It actually broke through. And so a sell opened here. Right, with the take profit 53 pips. You see, we're gathered over nearly 200, just over 250 pips now, but we have two negative trades. I'll just add this one up. Oh, from the wrong spot, sorry. $67 pips. And this one is also an extra 67 pips too. So we can just go to our calculator. $134 plus 67 equals. Okay, so we've got a negative amount here by the time we get down here. 204 pips. Okay, so let's work this out. We've made just over 250 pips, right? And we're at a negative territory of around 250 pips as well. Seems fair? Okay, this is where everything changes though, as the market starts to retrace back on itself. Okay, so this buy here now, that sell closed down here, by the way. So we have, two negative trades open at the moment. So, and one buy that opened up here. And so this buy would blindly close at the next sell position, which is 54 pips, right? So we'll put 54 pips there. and these both would be minus, would be less 54 pips. So go back to my calculator again. Should know that, I mean 54 pips, I know that that's, I don't even know why I'm doing this. That's 150. Oops. Bear with me, people. You'll see this in, you'll see how this works in a second. So that's minus 150. It's starting to look a bit better, yeah. And minus 13. And did this one at the bottom here, this cell at the bottom here open? Yes, it did, just. So you have a minus, one more third minus, oh, 69 pips. So now you have 3 cells. Okay. 2 not so negative, so don't worry about it just yet. It's just over 200 pips there. As you can see, we've made about 300. Okay, so now that it comes back up here, we don't open up any more trades because we've still got trades there. This trade's still active. Yeah. This one's gone. Okay. Let me get rid of the ones that are gone now. Okay, that one's gone, right? And this one's gone. And this one's gone. And this one's gone. Okay. So these are the trades that are left now. Okay, so as this one gets to here, as the market gets back to here at 128.97, it goes up to the next take profit, which is here. So which is, it would have been easy if I kept those ones on the chart, but I just wanted to show that this is the amount of orders that are open at the moment. 103 pips. So this one goes from to minus 13 to about 80. Oh no, it's actually 90, sorry. And this one here goes to about 170. I'm just going to average these now. There's no need. So this one tapped out, okay? This one's gone. We put this on the chart now. That's another 90 pips taken, and this one's gone. Now that we've gone back up again, to here, yeah, to this sequence in the hedge trading strategy. By the way, this one is only minus 40 pips. So you should see here minus about 200 pips, but you can see all the pips we've taken from the market. We've taken just over 400 pips. So with this strategy, you now could liquidate all your positions and make 200 pips. Or if you want to keep it going, what you would do now is, see how this is the top buy. Now that you're back at the top buy, it doesn't matter what it is, back at the top buy position, you'll place a sell when this one goes up above your buy price, the buy price from here. So you place an order to sell, right, just in case the market goes back down, which it did. Okay, so this one's still open, I'd just get these minus ones off the chart, because I'm going to keep the negative trades on the chart anyway, so that we know I can calculate them by the end of the session. Okay, so this one taken down to this next support again, which is 101 pips. And you can add these orders in, by the way, manually, and you just set the take profit manually as well. Okay, so now that it's come back down here, you remember the pattern. We place an order at the take profit, by the way. This order to buy opens here, and this order to sell opens here if the price falls through. So it came down, the buy opened, yeah, at the support. Unfortunately it tested a little bit lower and just opened the sell as well, and that happens sometimes. I mean, there was just a flick through, so the sell opened, and where are we? Oh, we're here. So yeah, it came down, opened that again, went down here. As you remember, this was the buy area. So it took profit here, and a buy opened on this sell, so that's a 47 pip. As you can see now, you have 1, 2, 3, 4, 5 trades open. Now this buy comes back up for another 47 pips, and it closes out. Never went below there, see? So I've still got that one open. You can see it's starting to add up now. So it comes up, then it does actually go to the target, which is here. So this one closes out. Just get the pips first there. 102 pips. Just put that in there. So we'll get rid of this one now. Yep. Oh, we got rid of this one before. So we've got 102 pips back up to here. You can see I'm now broke above the sell position. So place this here. Place an order there, which it didn't open this time, which is good. Price went all the way back up to 131, a little bit higher than 131. Our take profit on our original, this is the first buy we have, one of the first buys we ever, yeah, actually was the first buy we ever did. It was here, so we, at the same time as that take profit happened, a sell position was open. So 106 pips. So we'll get rid of this one now. Okay, so now that this one's open, this sell position's open, you can see that we actually have, oh by the way, a buy order would be placed above this range, just in case as well. Okay, so as you see, that never opened. If you're wondering whereabouts below these support and resistance, about 15-20 pips below each one. Anyway, this came back down to our take profit level. It's about 104 pips. Okay, so we'll get rid of that now. Okay, so if you look at this on the chart here now, and you see what's happened here, I'll get rid of this because this isn't opened. We have two negative trades. Okay, one that's negative just a few pips, about 20 pips, and one that's negative about 185 pips. But we've made 100, 200, 300, 400, 500, 6, 7, 8, about 800 pips so far, with a negative score of just under just around 200 pips, so 600 pips up. Now if you ride this sell down to here again, place another buy order, so that takes profit. It's another 103 approximate pips. So now this buy order opens, then it goes back up to that exact spot where another sell is open. By the way, I'm always placing another buy just above at the same time. However, as you can see, that one just didn't open, so I'll get rid of that, which is good. Occasionally that happens, it just doesn't open, the support just holds. So as it comes back up, make another 103 pips here. Yep, get rid of that one. And here it comes back down again for another 103 pips. Okay, so we'll get rid of that. To here. Okay. Another buy opens. And just in case it breaks through, another sell opens. By the way, these all have really high stop losses, so this is an equity trading system strategy. Okay, so we come down here, this buy opens, this sell opens. Once again, we ride it down to the next bullish, next support zone, for a total of around 50 pips. Okay, so that one's gone. So now we have two buys and two buys. Oh, we have these are pending orders down here, by the way. They're just pending. The price hasn't gone down there yet. We have two active buys and we have one active sell, and we'd also have a pending sell just here as well, just below here. Okay, so these become all pending areas as the price moves up and down, up and down, up and down between these support and resistance zones. And so this time price actually did break through. It never went back all the way up for this buy to get to take profit, just didn't make it. Take profit. It's just underneath here. Actually, it was so close, but it just didn't make it. So that buy is still active. Price went down here to the next support resistance zone around 126.70 mark. So for another $130 pips on that one, on that sell. So we'll get rid of that. Yep, and both this buy and this sell opened at this zone, as you can see. That's okay. That's part of the system. So now we have 3 buys and 1 sell. So as price comes back up here, once again, this changes to sell order. This becomes a sell order once again. And okay, this one here, we take profit again on this as that seller order opens. So 125 pips on that. So we take that one out. So now we have 2 sells, 2 buys. So this is a perfect time where you could basically close everything out and you would have made about 1,000 pips, just under 1,000 pips. I'll add it up in a minute. I'll just go a little bit further though. I'll go to the end of price and then we'll add up the negative positions and the positive positions, and then we'll liquidate everything. We'll just see how much profit we made at the end of this this period. If this period was traded, this was from the beginning of September, around the beginning of September to current price now. If this hedge trade strategy was traded this exact way. Okay, so we got a negative sell here. This buy goes to this sell. Put that a little bit lower. That's a little bit lower, about there. See the pins? Okay. Yeah, still opens. So this one takes profit. 54. So we get rid of this buy. Okay, so we don't have many buys anymore, as you can see. We have 3 sells and 1 buy. And so when this bear when it passed up here, this buy actually went to the next target zone, which was here, just below, just around 130 it was. We also placed a pending. We would have also placed a pending buy trade about here. We know it did not. It actually hasn't opened yet on this in this strategy. So this one's pending. So we'll get rid of that. And then so this buy here went to the take profit, which is 98 pips. So we can get rid of that one. And then this sell went to take profit, which is 98 pips as well. Okay, and so now we'll see how much negative. Oh, whoops, that one actually stays. Sorry, this one goes. Okay, and see now price comes back up here. The take profit would be here at a pending sell trade, and there'd be a pending buy trade above there, and also there'd be a pending and if prices go back down, there'd be a pending buy trade above these supports again as well. So what we can see now on the chart is we have 3 negative sell trades, so I'll add them up. Okay, one is minus 230. The other one is minus 84. And the other sell trade is minus 64. These are the open positions, by the way. And we have a buy trade which is about I'm just going to say 45. Oh, I don't know why that went green, but it's okay. Okay, so I'll add up all these positions now of the history since trading in September. It started in September the 14th. It's now 27th of November. Let's add up all these positions trading the Euro US on the H4, by the way, with this hedging strategy. So I'm just going to average this out. I'm not going to do exact. 100, 200, 300, 400, 500, 600, 700, 800, 900, 1000, 1100, 1200, 1250, 1200. Wait a second, I'm just trying to work this out now. 1300. I mean, wait, 1400. Sorry, 1525, 1570. 1770, and plus is 45. We'll just round it up to 1800 pips. Okay, so that's 1800 total profit during that whole sequence. I'll put that in there. These are the negative ones. Now we just minus this amount. That's an approximate, by the way. I'd actually, it could be a little tiny. It could be 10-15 pips less or 10-15 pips more. Just rounded everything up and rounded everything down. But that's most likely the price if you added it up exactly. So anyway, I'll add these up now. We've got minus 310. It's 310 minus about, we'll just say 380, which is saying the minus is a little bit higher. So I'll just put that here. So you could now liquidate all the positions on your account, and you would have made a total profit of about 1,420 pips profit overall. Okay, so now you can see how this hedge trading strategy is working. You can just keep doing it. Doesn't just necessarily mean that you have to liquidate your positions early or whatever. You can, and I mean, taking the profit is always good once you see a good 200-300 pip profit with the strategy, and closing the negative trades as well. Or if there isn't many negative trades and you see that you're in positive, like 200 or 300 pips. Even with the losses, that's a great time to liquidate as well. But as you can see, as the time progressed from September to November, which is September, October, November, that's just over 2 months. 1,400 pips could have been taken, which is an average of about 700 pips a month, which is a great amount of pips from one currency pair. and particularly that it's not really this isn't a system where there's too much thinking involved. It's just placing your orders and putting the targets where another order opens at these support and resistance lines, these major support and resistance lines. It's crucial that these are the daily major support and resistances, because they, you know, when they're respected highly, that's when the strategy starts producing massive profits for the trader. And when they're not, you know, and so during the times when these areas aren't respected, then the hedge trading strategy holds the loss until they are, and then once they are, it does go in the way that you want. That's when you can liquidate your positions. As you can see, 1,420 pips profit overall. Yeah, I mean, that's not something to. It's not something to. That's a great amount of pips. So I hope this video has helped, and yes, it can be done on a some common questions might be, yes, it can be done on a number of different currencies. However, the majors are going to be better, like the Euro US, GBP US. I'm not so sure about the Australia US, because the Australian is very carry trade affected. It's better with neutral currencies such as Euro US, GBP US, even New Zealand US, currency pairs like that. The application of trading this style is always best to start at a really high position or start at a really low position on the charts, and then allowing these big moves to happen before you start hedging. As you can see, I started at a major resistance area on the chart, and time and time again the price just ebbed and flowed below that. However, it can be done anywhere where you feel that, where you see that the price ranges a lot, and as you can see, it's very, very profitable. And you know, I mean, if you're using equity, that's the thing. It's the key aspect of this style is, as you're taking profits, the equity in your account is building. So after at first you might seem like you're in negative equity in your account, but then as time goes by, that equity will grow. And if as an example, once you get to 1,420 pips profit, I mean, even in a micro account, that's $142. In a normal account where it's $1 per pip, that's $1,420 profit over just over 2 months. That money can now be used and invested back into doing another round of the hedge trading strategy. And now it seems like it's basically no risk, because you could just be using that equity to continue on with the strategy. Okay, so I hope you enjoyed this video, and like I said, my name's Tom Weller, and feel free to visit my blog, which is at forexreviews.info. And if you enjoyed this video, please comment below or share me in the social networks. Get this video out, this post out. I'm sure it can be useful to some traders out there in the Forex market. And yeah, have a nice day. Okay, bye.